one of the key parts of any framework is to enable you to avoid mistakes. And what I mean by that is not to not lose on trades. Anybody will lose on a trade, of course they will. But it's to be able to sort of not take on trades that really don't have a great deal of value on a certain day. And that's something I'll very much be looking at in a little bit, particularly looking at what I would call a holistic framework. So that's one of the things it's trying to do. It's trying to filter down your options as well. Again, as I said at the beginning, there are so many different ways you can go about trading and different ways you can do things that you you need a way of kind of narrowing this down so that on any given day you can say, yeah, this is what I want to do today. These are the options that are going to suit me best on any given day. That's the whole goal of it. So you're then able to go, right, I know where my big chance is going to come today. I don't need to get overly involved beforehand. I know what that big chance is. I know where I'm going to get involved in that. The other thing that it does for you is give you a situation where you have almost forced conviction. And what I mean by that is if you've got a framework that says to you, this is what you need to do, this is how you should go about taking these trades on, you're then into a position where everything has already told you what you should do. The trade comes along, you have to take it because all of your preparation, all of your framework, all of the work that you've put into learning certain skills now says to you, well, you have to do this. And whilst that seems quite pressuring, it's actually very useful because it takes away the conflict that often goes on in any trader's mind. The other thing, of course, which we spend a lot of time talking about is this gives the ability to grow. Skills alone do not give you the ability to grow. They are useful in certain situations. But by having a framework, by having a methodology to how you do something, then what you're able to do is give yourself a basis and go, okay, this worked, this didn't. Now you can then pick apart why it did or why it didn't and start to understand how you can develop new ideas from that. That's the key bit to any kind of framework. Now, what a framework is all about is essentially asking the right questions. Trading's full of sort of questions where people try and overcome uncertainty by wanting to know stuff. They want to know answers. And ultimately, these are not the good questions. The best traders ask the best questions. And majority of their questions are not questions that have answers. So to give an example of a few bad questions that I know a lot of people will ask, I get asked these so frequently, and I'm sure some of you guys have asked them of yourself in the past. I've done this, certainly. But questions like, why did the market do that? People will look at a large order, and I so often get this question, particularly on any kind of course that I'll run. And so I say, oh, there's a large order. What's that person doing? Are they taking profit? Are they getting into a trade? And again, what these questions try to do is they try to provide you an answer. They try to provide an explanation for something. This happened because of this. This happens because of this. If this happens, this always happens. That question of, well, can I do this every time I see this situation? What people are trying to find there is certainty. They want an answer. They want a definitive yes or no answer. Now, the problem with this is one, a lot of these questions cannot be answered. You have no idea what somebody with a large order is doing. You ultimately can't answer precisely why a market did a certain thing. So, if you can't do that, the answers to those questions ultimately are speculative at best and just outright guesswork at worst. And so they're never going to provide you with any kind of constructive forward looking idea. So, what your questions have more got to be about is implications. The best traders ask questions that relate to implications. What are you going to do next? So, things like, how's a recent move change positioning? Now, if ever a market moves, this is going to change the way people are positioned. Of course, you don't know precisely how, but what you do know is that it has changed in some way. You can at least think about who's going to have participated in that most recent move and where they are likely to have got in, what exactly they're likely to be looking for. You can ask yourself, where does the next move start from? Yeah, how's that next move going to play out? This is a key question that people don't ask themselves enough. People have very, very clear ideas of if the market goes here, it will then go here. If this happens, this will happen. But what they don't think about is how it will go from here to here, from A to B. People assume a straight line and it doesn't happen. So it's asking the question about how exactly do I expect this to happen? What are the hurdles? What are the things that get in the way of this trade? And these are just some of those questions you need to be asking. And all of this kind of feeds into your framework.